Hey everyone, welcome to another YouTube Live. We're going to have a Bitcoin market update. Just going to be going from the monthly all the way down to the hourly chart, discussing what's happening with the price of Bitcoin. So with the monthly, we see that we are in a bit of a consolidation here, looking and reflecting back at what happened last time before breaking the all-time high. We see strong pushes and consolidations with some continuation pattern. We can see this is an ascending triangle. This looks a little bit more like a descending channel. We don't exactly know with only two candles, but going into the smaller time frames, we can see that yes, this is an ascending triangle, and this does have a descending trend line connecting the lower highs, and then when it breaks, we get a strong push to the upside. So what we're seeing right now is yet another consolidation. We got a significant push to the upside, which got rejected at our previous level of resistance. We got a pullback to our major key level of ascending support. It's the green curved trend line. And then now we are getting halted at the same location where the bodies of the candles got closed. So in my personal outlook, it looks like we're consolidating, getting yet another squeeze similar to what we saw here when we're holding horizontal levels of resistance. We see that right here, and we're getting higher lows. We have to break either to the upside, breaking the resistance, or break to the downside, breaking the ascending support. So in this particular case, the ascending support has been respected for basically a decade, since 2010, or started 2011, let's say, so almost a decade, and this ascending trend line or ascending horizontal resistance has been respected since November of 2017. So clearly the trend, the momentum, and the strength is towards the upside, and that is how we're going to be looking at the market. But in my opinion, we could see a couple more months of consolidation here, where we can see it's perfectly normal to see the price fluctuate in a certain zone and then finally get a push up. And that takes a lot of patience, similar to the markdown here that we saw after the consolidation around the 6K range. And then it took a while for the price to actually fail and break below the zone. Same as it might take a little while for the price to push above and break the 12K-ish zone that we currently see used as a resistance on BTC. So in the short, well, I guess not in the short term, but in the monthly, I do think that the price is looking to consolidate. Now, that doesn't mean that we're not going to be able to trade because of volatility, because just within the current range, we have over 30% to work with. And looking at the different alts in the market, 30% move for BTC could mean a 60, 90, or 120% move for some alts that we're trading, because alts are obviously a lot more volatile than BTC. So in that said, we can now move in and discuss the weekly, because we already know the trend is to the upside. We already know we have a horizontal level of resistance, and we're probably going to be in some level of a consolidation within this kind of range. So knowing that, well, that's our bias, and figuring out our long-term bias, we can then move to the smaller time frames and discuss what we could potentially see here. Because let's get our snip here, which allows us to draw. Also, if anyone has any recommendations for like an alternative to snip, very open to it. So we know that there is actually, I don't think we talked about, let's just zoom out a little bit more so we have a better overview of the macro two descending trend lines, because we have an anchor point right here connecting our 2 points. Our first trend line connects the candle closures right there with a type A and a type B, and then we see a type B right here, and then we see a type A right here. So we got 3 touch points and an anchor point, making a valid zone. We did hold above this zone with a bit of a fake out there, and then we dumped back down. So that's now going to be our resistance area that we're going to hold below. And then we also have the outline of the market structure, which is going to be with these 2 wicks right here. So that's going to be the outside in confluence with our horizontal zone. So if the price does inevitably come back to this zone, that's going to be our next level of resistance that we'll most likely see. So that is the upside resistances that we currently have. We have a horizontal one right here. Because of this zone, we can see horizontally, and then also with the descending zone. So that's going to be our first level to kind of break through. And then once we break through that, we got candle closures right there. We can see candle closures right there. and that's going to be their next level of resistance. So we're in a pretty tight range, and that's why I do think that we could be range bound for a little bit, which is a little bit harder to trade. But we just have to understand that we could potentially be making a higher low, because this is a low, this is a higher low, and we could be making a higher low. How do I think, or why do I think it's there? Well, the first thing is this ascending trend line, and then the second thing is this horizontal, both support and resistance, respected in the past as well. So we can see that this area is an area of confluence for the buyers, especially because this ascending trend line is so well respected. But at the end of the day, we will have to see how the price reacts to this area. But if we do see a drop, this is going to be the area that I am looking to enter some longs, because we do have an area of confluence. Tested it as supports before, but the main thing that I am looking at is this ascending trend line, because that is going to give me the structure of the higher lows that we're currently seeing. So it'll be a little bit of a challenging couple months, in my opinion, in terms of trading, because obviously when you're range bound, it's a lot easier to look for opportunities. Or sorry, when you're not range bound, when you're in a trend, it's easier to look for opportunities. When you're range bound, it can be a little bit challenging unless you're looking for shorts up top and longs at the bottom, or something along the lines of that, or you have a nice mid-range zone. But unless you are looking at either entering at the top or bottom, entering anywhere within the middle of the range is a less ideal place to enter, because you don't really have as much edge within the middle of the range compared to what you're able to get at the top or bottom of the range. So taking a short at the top here gives you the best opportunity, because if you put your stop loss up here, the price is respecting this zone and this zone, and it could be respecting a couple mid-range zones right here. But at the end of the day, those are just zones of sensitivity. They're not really supply or demand zones. So it's really good when you're able to see the price break out of a range, and then you can look to continue the trend. But while the price is in a range, like we can see, and like we'll probably see like so, we have to look at the resistance and look at the support. So if we see the price break to our next key level of support, maybe 78, 7,900, I'll definitely be looking for longs at that area right there. So the resistance is a little bit more messy, but the support is pretty clean there. So now let's break it down into another chart, only looking at BTC pairs for this video. This is now going to be the CME futures. So this is the Chicago Mercantile Exchange. This is the instrument that allows institutional traders, investors to gain exposure in Bitcoin. So it's a futures contract. So they're not actually purchasing Bitcoin as an asset outright, but they're trading the contracts that are able to give them exposure to this volatile asset. So we mainly look at this just for gaps, and right now, recently on the daily, we haven't really seen any gaps in the market here. We did see a gap right there. I think we will inevitably fill it, but at this point in time, we don't really see a whole lot. I just put a middle range zone, which is the $8,600, $8,700 range, maybe $8,650 to be precise, and then we got our support at $76, $78, and then we got a longer term resistance, maybe around 10.7, 10.6, and then we also have another one at around 12K. But right now, we're just working with what we have. We don't want to look too far in the future. We're just seeing how the price is reacting to this area. We got a strong push to the upside. We'll obviously talk about it on the smaller time frames, but we're holding this right now. We're in a consolidation sideways. We'll see where it goes. It kind of reminds me of a mini version of what we saw here, and we'll discuss on the 4 hour and hour why that is. This is another daily chart. This is the Gemini Exchange, and we'll just talk about the market structure right now. So I have two trend lines that are the main ones that I'm looking at. we have this one right here, which is the descending zone. This is the anchor point right here, and this is the end. We can see our first touch, second rejection, third rejection. So we have a potentially valid zone, pushing the price, making lower highs. And then we have trend line number 2, anchor point right here. We have one reaction where the price pushed back up. I didn't really draw this trend line in until we saw a reaction here. Once this reaction had taken place and we saw that strong bullish candle push the price up, then I decided to incorporate this line into my daily chart, because now we have 3 times where the price has respected and reacted to this zone. If we get the price to kind of fiddle around here and then come in, we can see that it is pushing the price higher. We could see the price then move to the upside or fail and come to the downside. And then, like we said, 77, 78, somewhere around there, that could be an opportunity here for us. So I like where my current trend lines are. We do have a mid-range zone as well, around 82, and then we're currently holding a level of support. So if we do break this ascending trend line, I will be probably looking for shorts, because we're pushing up here into our resistance yet again. So if we are not able to see that, then we're kind of coming into our zone of confluence where you see the descending zone, push the price down. It kind of has to make a decision. It can't squeeze forever. So then if we do break to the downside, it will be looking like an opportunity for us to enter a potential short here. We do have a mid-range zone that we might hold for a little bit, but inevitably, if we do get the bears to take control, I think this range could be a possibility that we will hit. So that is option number 1. I don't really think I'm going to be looking extremely bearish until we break this ascending trend line. Option number 2 is if we do the same thing, if we consolidate here and then we break this descending zone instead, then we might be coming up to this next resistance, which is our previous resistance, new support at around 96, 95. And then we also have that descending zone that we talked about on the weekly used as a resistance as well. So we got a couple options here. We don't want to put too much bias on the chart. We want to be open-minded, but we have a couple options here. To the downside, we're looking for a break in our zone of confluence, which is around here. We got our horizontal zone and we got our descending zone coming together. Once we're breaking that zone of confluence, what are we looking for? Well, we're looking for a lower low. This is a low, market structure low. We want to see a lower low, probably at the lows here. And then if we're able to see a lower high, this is a high, this is a high. We want to see a lower high, hopefully in confluence with this new resistance zone and this new resistance trend line. And then within the rejection, we're looking, let's say if the price is now coming back for the pullback, we're looking for the first injection of sell pressure. And if the price is able to come back again, once we see that second injection of sell pressure with an engulfing candle or some with maybe a bearish pin bar, some engulfing candle, something that is going to give us an indication that there is sell pressure within the market, then we can look to enter. Or more of a confirmation, we can look to break a small little support that we're holding right here, and then when the candle closes below it, then you enter, and then your stop loss is above there. That's the highest level of confirmation you can get with 2 injections of sell pressure coming into the market. And then you're looking at take profits at around here, maybe a little bit right here, but ideally you're looking for the extension to hit this level of support. So we got options. And then for the long side, it might be a little bit messy. I think the bias is a little bit more short, but if we are going to break this resistance at 9K, then we'll be heading potentially to the next zone. But we do have to keep in mind that we do have a descending resistance that we will have some level of interaction with. So that's in the next couple days. So we have a few options. We'll see what the price action does, but we are well aware of the overall market structure. So when we are day trading, we don't want to, in my opinion, look for very long extensions, because we have a resistance at 89 and we have an ascending level of support holding the price, making a higher lows. So as the price continues towards the apex, it's going to form shorter and shorter moves, less dependable, because when you have nice long extensions, you can get solid risk rewards. But when you're trading in such a small range, you could look at the 5-minute and maybe scalp some nice trades up and down. But looking at how far you're getting, 3% is actually pretty good if you're risking, let's say, 1% or 0.75. Obviously, those risk rewards are favorable. So, and that said, now let's look at the Heikin Ashi 4-hour. So I think I will draw in this trend line here, which connected the very low right here to this point right there. So we got a nice trend line connecting the lows, and we're currently seeing the price consolidate sideways. So this is definitely going to be a little bit more of an in-depth BTC market update, but it's good to go over it. So when the market makes a move to the downside, or when the market moves to the upside and it wants to change direction, what does it have to do? Well, sometimes it instantly goes the other way. But what happens most of the time is we get some level of hesitation before it goes the other way. Same as from bullish to bearish. So what we're seeing right now is a strong bearish move to the downside, breaking key levels of supports. And then we didn't get any real pullback because the confidence was so strong, or the lack of confidence in the bulls was very significant. We didn't get any push or any real entry from the buyers, and we pushed all the way down. And then what do we get? We first want to see, okay, well, are we holding any sort of resistance on a larger time frame like the 4 hour? Well, we can see this guy right here got resisted right there. That is a potential for a high to start the consolidation, because we moved to the downside and it doesn't seem like we got any pullback, so now we could start seeing the pullback here. So the consolidation is going to be from resistance. It could be here, it could be here, but usually we try to aim for the highest point to give the price the most amount of room. This is the first point, and then yesterday we were looking at this point right here for a resistance area to start the consolidation sideways. And that's exactly what we saw. We saw a rejection and a hold of the sellers taking charge, keeping the price below this area. So now we can say, yep, we are in a consolidation sideways. And what is now our next move? Well, at this point in time, we see the price kind of right in the middle of the consolidation. Like we said before, we like to be looking to enter at the highs or lows, not in the middle of the consolidation. So what we're going to do is hopefully the price does fall down to the lower half of that zone. And I think we are going to try to potentially look for some longs at this area. If we do see a nice descending trend line, squeeze, and then hopefully we'll get that price to come back up to the resistance area, because right now my bias is sideways. So that's my overall outlook on the 4 hour. Let's take a look on the 4 hour for the candles. I'm also going to drink a little bit of coffee here while we switch. So now discussing on the candles, a 4 hour chart, we can see that it's very well respected. Got a lot of volatility here recently with lots of strong bullish and bearish candles within this range we can see, but very, very well respected. We see the candle bodies close literally perfect on a line for 4 4-hour candles. And then we see the price move up a little bit and then come back down, hold that perfect level of support again, and then we pushed above our descending trend line, holding the lower highs with the price squeezing against a strong demand area. This is the apex. It got really close to it, pushed to the upside, and then where did we hit? We hit our recent high, which is right here. So now we validated this zone as a resistance. We can then say, okay, we got a strong support. We can easily see that here with wicks and body closures right at that level. We can also see that there's now in range with the resistance being right at around 89.50, let's say, and then the support being at 85.50. So right now we're in the mid-range zone. We can easily see that the price is right below or right at our key previous support and resistance. So we can see it's a mid-range zone within our resistance and support where price has been bouncing off of. It is somewhat of a dependable area to trade off of, but as we can see, the price can instantly just switch back and forth here. So we have to be a little bit careful when we are entering these zones. Ideally, if we're entering from a low entering, trying to make it to a high, we could potentially look for a push, a pullback at that zone, or vice versa if you're going down. But I don't personally love trading bounces at these zones as much, but you can use them. That's not a problem, but I just like to usually try to wait it out and wait for these zones if I can, unless I find a really good price action pattern on a small time frame that is able to give me a validation that we're going to either go to the upside or downside. But overall, that is the current market structure for the 4-hour chart, which is what I like to use. We're just range bound right now, and we already talked about the similarities that the current market has with what happened right here with the huge jump down. We saw a descending trend line, and then we formed a consolidation for a while. That was definitely a pretty significant fake out that we saw, but at the end of the day, it was a retest to our large market structure triangle, similar to this zone right here. We saw a triangle pushed to the downside, a consolidation, something somewhat similar, so I wouldn't be surprised if we do get a bullish push to the $9,500, $9,600 zone, and then we do get a market breakdown and push ourselves back to the $7,800 area. So overall, I am going to trade the range as a range. So now looking at the 1-hour chart, I would like to ideally wait until the price is closer to the demand zone. You could look at a small short here, either near the 87 or when we break and retest the 86.60 range. But at this point in time, I think I'm going to be patient here. Yesterday we took one too many trades in my opinion. I think we could have left it with the second one. And then also so if this was a trend, I moved the stop loss too high too quickly, got taken out, and then the price went in my intended direction. So something I definitely have to work on. So, you know, as you grow as a trader, you're always going to be working on things. We made money yesterday, which is great, but we could have made a hell of a lot more if I didn't cut my trades too early, and I was just trying to manage risk, which makes sense, but being able to have conviction, confidence, and the ability to slowly manage your stop loss higher up and not try to, you know, micromanage a trade is pretty important as well. But at the end of the day, it just matters on what your system is going to be kind of telling you what to do, or what your criteria is. So getting back to market structure here on the 60-minute chart. So this is going to be kind of the smallest time frame we're going to use, and then the 5-minute chart is basically going to be the small kind of what are we seeing right here that is going to tell us either up or down. And we're not going to look or consider kind of the rest of what we have here, because we're going to look at the hour chart for that. So the hour chart is kind of the last entry execution time frame, and then sometimes we do use the time frame to, you know, look for small levels of volatility, but the hour chart is the real kind of last execution time frame that we are using to assess the market structure, the price action, and the VSA, which you can see right here. So now talking about the 1 hour, like we said before, broke the descending resistance right here, and it hit the resistance, creating our consolidation, and then we can see strong level of support holding the price at a key level at around $8,500. So right now we made a hold of the support, strong push to the upside. We got held up because there's a lot of sell pressure here, and now we're forming probably a slow move to the downside. So at this point, we're not looking for longs, we're only looking for shorts, but like I said before, we have to be careful within kind of this range entering all along here, because it's messy. The price is going to, like, look at this candle right here. That's a messy candle. That's going to take you out no matter what stop loss you have. Whereas if you're entering on a high like here, or if you see this on the 5-minute and you want to enter at the high here, but if you're entering all the way below here, like if you're entering here, unless your stop loss is here, your risk reward is at 2, maybe 3 to 1, or your entries right here, your TP1, TP2, or something along the lines of that. But you gotta be very cautious when you're entering at these mid-range zones in consolidations. It makes sense to try to wait it out like theoretically you could have the price come back down like here and retest these zones. That would be an opportunity. So being very, very patient on the larger time frames is important. We're seeing a consolidation. Ideally, what we'd want to see is a price initially test this zone at least once, maybe twice, like so, and then you see some sort of descending trend line. Once you break that zone, that's the validation number one, that it's broken the zone. Validation number two is a market structure, previous resistance, like we can see here. Let's just talk about the three things that we're going to look at. Number one, market structure. They're not necessarily directly in order, but market structure is number one. We see that there's a resistance right here holding the price down. We see it hold here. Once we break above this zone, like here, and hold, we do see this wick right here. We don't really see a red candle pulling back, so we might want to look for other alts that have similar price action structures that have something that is a little bit better for us to trade in terms of the market structure, because this did not pull back. But just looking at market structure, we see that it made a new higher high. Now it's broken the consolidation here, and now it's potentially making a move to the upside to this range, because we broke the market structure sideways trend, bouncing, and then we made a higher high. We're looking to enter on the higher low. This wick did provide a higher low, but then it went right back up because there was so much buy volume. That's number one, market structure. Number two, price action, PA. This is the descending zone getting broken. This is a descending triangle pattern, and this is a breakout. Price action. Market structure is not counting the descending triangle, it's just counting the previous highs that we've seen. Which way is it going? Which way do we want it to go? Is it going to form that direction market structure? Last thing, volume spread analysis, VSA, right? This, we see that there's significant sell volume coming into the market right here, but then we see the bulls hold the price, and then now with the market structure shifting, what do we see? We see increasing buy pressure coming into the market compared to what we saw recently, right? That is a bullish indication where you see sellers. Look how little amount of sell pressure there is right here. When the price is about to break, you see a significant reduction in sell pressure. Now, what do you see in that same time frame? You see a very low amount of buy pressure. You see one solid push, hold that support, and then while it's breaking, you see here's buy pressure, more buy pressure, more buy pressure, more buy pressure, pushing the price up. So VSA in check. Decreasing supply, increasing demand. That is what you're looking for in a breakout. So when the price does inevitably come back down to our demand zone, we know what we're looking for. We have a systematic approach. We have a criteria. We have a set specific list of things we're looking for. When the price does break this zone, inevitably we will find a descending trend line like we saw here. And when it does break, we're looking for this exact same thing that happens not every single time, but when it does happen, we have an edge in the market. We have a probabilistic situation that we know we can make money if we do the right things every single time. If we stick to our disciplines, if we stick to our rules, if we stick to our plan, we know over time if we take this trade many times, we will make money if we have all the criteria set, list things done. So ideally, if we want to be patient, we're looking for the price to hold and come back to our $8,500 zone where we have the highest probability, highest edge situation for us to make money. With that said, we can look for day trading opportunities here, but I think on a swing trading situation, it just makes more sense to wait for the price to come back to down to this low. Unless you're willing to take, or unless the price comes up to, let's say, this zone, then if you see some failure of demand here, you could be looking to enter here with a stop loss above this area, and then maybe your risk reward is at 2.5 to 1, 2.8, 2.3, something like that, which is pretty good. But if the price just continues in the consolidation, we will not be looking really for swing trade shorts. We won't be looking for day trade shorts, but swing trading, not really. We're looking for this move for the swing trade. So that's the analysis on the 1 hour. We'll be going over our different tools now. With initially, we're going over the what this represents is going to be the margin trades that were opened on Bitfinex for the longs and the shorts. So this is the amount of the positions that were opened on margin on Bitfinex. So we can see resistance. There has been a significant decrease in the amount of buy positions that were opened, or long positions that were opened on margin on Bitfinex. There's been a lack of demand, but we can see we saw the price hold within the previous pullback, so we were making a strong move to the upside. Let's say this is a $7,800 zone, and we broke out and we got a pullback. This was the pullback, and we got to move to the upside, and now we're seeing another pullback. So we're getting a lack of interest from the buyers right now, which makes sense because the price is not moving up. People are not making money. So we'll see how the price interacts with this area of support. We've seen it get held in the past, as well as be used as a key level of resistance as well. So knowing that, it's a significant zone within the chart. So I think we could see some interaction here where the buyers gain some level of confidence, and we could see that level. We could see the price hit and hold that level where buyers are starting to take interest when the price reaches this $8,400 area. If that is the case, well, then we have a high probability of this happening, because we have a psychological zone where buyers are now starting to re-enter margin trades, meaning they're re-entering the market. And if the margin trade goes up, well, A, short sellers are going to get out of the market, and B, they might be adding to the position, which then would create more price appreciation, which would then mean that we're just going to make more money if we're in a long. So if this does come together where the BTC longs on margin are coming at the same support area that we've seen, and it's holding, we're seeing buyers enter the market, well then, if this is in line with our area of demand, well, now we have a confluence with our tool as well as the price action that there are buyers in the area at that area, and we're probably going to have a similar market structure break like we saw here. So we're going to look for these high probability situations where we're not just using the candles and the price action. We're using the many tools we have, the volume, market structure, price action, the tools we have, the longs and shorts within the market, the confidence, all creating a story within the price action that we can try to understand. So that is the longs. The shorts have very, very little amount of confidence. We can see that they had a significant drop. They're basically at the lowest point. They have the least amount of positions open since beyond 2018. So there's a very significant lack of confidence from the sellers to put on margin shorts, because they think that the price of BTC will not be going down significantly in the future. So that is something to think about as well. And then the last tool we are going to be using is, like always, the Coin Farm exchange that is going to be showing the margin longs and shorts within the different exchanges that we're looking at. First BitMEX, then Binance, then Bybit, and then like always, we're going to start with the 24-hour volume. So a little bit more weighted towards the bears, 51% on the bears for BitMEX, 50.1% for 51% for Binance, and then 52% for Bybit, all weighted towards the short side. Now for the 1 hour time frame, more weighted towards the long side. Wow, a little bit surprising. 57% for the long side on BitMEX, 51% for Binance on the long side, and 57.5% on Bybit for the long side. So On the 24-hour time frame, looking a little bit more bearish. Not huge discrepancy really at all. But then on the short side, or not on the short side, on the smaller time frames, on the 1 hour, we see that the longs do have a little bit more control, putting on more positions. So that's the overall outlook for the market. Like I said, I think I'm going to be waiting. I think day trading may be an opportunity here for a couple shorts to the downside for some little bit quicker scalps. Maybe like risks of like 1 or 0.8 and then rewards of maybe 3 or 4 or 2.5 or something along the lines of that. So, smaller, shorter risk rewards, trying to be patient only for the good, dependable trades on the downside, only really looking for shorts. Trying to enter shorts at resistances, not at supports, once we have validation. But for long-term swing trades, meaning 2-3 days, I think we are going to be looking for a break similar like we saw here. This was a 15-hour trade, so that wasn't even a swing trade, that was a day trade. But I think that is going to be the next trade that we're going to be looking for BTC. So ideally, we're looking for a pullback here. I'll extend this, and we will patiently wait, look for day trades, but at the end of the day, we want to get the highest probability situation to enter, and I think, in my opinion, a descending trend line connecting the lower highs, forming a squeeze from the horizontal support in the descending trend line will be the next key trade that we will be taking. So I hope you enjoyed this BTC market update. If you got any questions, drop them in the comment section below. Ian Noble said, thanks for the daily updates. You're very welcome, Ian. Thanks for going over the long shorts. Good info to overlay on charts. Yeah, I completely agree. I think that being able to assess the confidence of the market by seeing how many margin longs and margin shorts are opened is a good way to do it, as well as looking at price action. Price action is going to be number one, but being able to understand the different tools that are available to you and then putting them together and building relationships with them will give you an edge in the market, because not everyone does it. A lot of people just trade based off of a single time frame on a single chart, not counting larger time frames, smaller time frames, or any other real factor, which is obviously a less ideal situation to trade. So you do need monitors and stuff to assess the market a lot more, but we try to do this to bring value, to bring more information that you would be able to find readily available, but then you would need the tools like being able to have multiple monitors, like the setup that I kind of have with all the different tabs that I have, because my computer is basically strictly for work, for trading, and I don't like play video games or like really do anything other than just work and business and all that stuff. So I just basically show you guys what I look at every single day, and then hopefully that gives you some information as well. So I hope you enjoyed the video, and until next time, have a good one. Says stream complete. I find that a little bit odd. Hopefully if we just go back to here, the stream is still active. Yep, the stream is still live. That is good. So thank you very much for watching, everyone. I will close the YouTube stream, and I'll continue the TikTok stream here. So until next time, happy trading, everyone.